And before we start, smash that subscribe button for more videos like this in the future. Because of my intense interest in this film, I spent in excess of 25 hours reading about it and writing this review. To do this, we consulted with a wide range of subject matter experts and collected their insights into an accessible film for the benefit of the viewing public. As someone who has had the pleasure of growing up alongside you, I would like to share some thoughts that have occurred to me as a result of our shared experiences. So, if you're interested in investing but don't know where to begin, this is the place to start. If so, you need to see this clip right away. The following is a list of resources that can help you learn more about the themes explored in this overview. If you feel uncomfortable asking questions because of a lack of knowledge of financial concepts, rest assured. Let us walk you through the fundamentals of investing and our amazing method and approach. Watch for further developments. I'd want to broach the topic of stocks. Furthermore, Robinhood funded the production. Speculating about business prospects and making plans for the future is one of my favorite activities. If you're thinking about investing, it's important to take stock of your finances and give these recommendations some thought. Avoiding financial hardship due to unforeseen circumstances is one good reason to open a savings account. In most cases, this subject has already been addressed in a prior essay on the financial markets. Speculation about the future does nothing. In case the current epidemic hasn't convinced you to start putting money away in case you lose your work, maybe something else that's been happening in the headlines would. You need to put away at least 1 month's worth of expenses, and preferably 6 months' worth of expenses. Debt cancellation is the next phase. If you don't want to get even further behind financially, you need to pay off your debt as quickly as possible. Getting rid of high-interest debt is another factor to think about before making a major investment. For me, ignorance really is bliss. The next thing to do is set up a pension plan. At the age of 24, I decided to go off on my own. Your retirement savings have been established in a Vanguard qualified fund account. There are numerous vehicles via which one can amass a nest egg for later life. Roth IRAs and 401ks are the most common types of retirement funds. For 4,110,000, workshops are a common means of establishing guidelines. The 9-to-5 workday and its attendant benefits may qualify you for the 401k program. Put money aside for your golden years. One can use a 401k plan as an investing vehicle in and of itself. It's fantastic that you've managed to put away $2,400, half of your annual salary. We are, in essence, making plans for the future. The improvement in my health is noticeable. So 401k. A tax-deferred annuity to which both you and your employer can contribute. The second frequently multiplies your donation by a factor of 3. In a moment, we'll describe exactly how your funds are allocated across stock and bond mutual funds. When compared to traditional IRAs, Roth IRAs offer tax-free compounding of retirement savings. Then, let's take a moment to define a few of these terms. Obtaining an education is a must if you know nothing about bonds, equities, or the stock market. In all that we do, we pledge to be forthright. Investing in stocks is analogous to purchasing discounted shares of a company. Consider Facebook as an illustration. To put it another way, when you invest in Facebook, you're essentially purchasing a portion of the business. Facebook's stock price may be expected to increase steadily as the firm grows because both the stock market and the stock's physical location favor upward movement. The Facebook stock market you can hear people raving about. In this way, it reveals the history and current state of the company's holdings. It is fascinating to observe the impact that investors' emotions have on stock prices. In the event of a pandemic, investors may panic and liquidate their holdings, dragging down market values. In fact, the inverse is correct. Once a stock market investor has decided, okay, this is okay, they will reinvest their profits. The market will soon reach unprecedented heights of prosperity. The concept of value investing, which seeks to strike a good balance between risk and reward, is widely discussed. To achieve the benefits of long fin growth, one must have a higher risk tolerance. Ansel, please return. There are, on the other hand, less risky investments that yet have lower returns. So you don't just lose cash, you lose excitement for life as well. Bonds are an example of a product class that is predicted to yield a low rate of return. To facilitate low-interest borrowing, governments and enterprises issue bonds. That loan makes financial sense and has reasonable predictability in the long run. To rephrase, it is a sizable sum of money that has been put into relatively risk-free investments like stocks and bonds. Investing in a fund is like buying a bouquet of flowers instead of a single flower. We'll talk about index funds and mutual funds today. Among the first forms of managed investment vehicles, mutual funds stand out. This fund is a professionally managed, diversified portfolio of equities and bonds. So-called funds, or mutual funds, are comprised of experts in the stock market who use their knowledge to hand-pick the best stocks, bonds, and other investments based on market analysis and their own personal study. In monetary terms, what you have amassed thus far is substantial. Losing money on a single stock investment can have a significant impact on your portfolio's performance. This is especially true if you invested heavily in a single stock like Facebook. For this reason, it's crucial to maintain a diversified investment portfolio. The proverb, "Don't put all your eggs in one basket," is commonly used to refer to the recommendation to spread your money around in different investments. Due to their structure, mutual funds are able to efficiently disperse risk across a larger pool of assets. Despite the expertise of the professionals in charge of these funds, the management fee of 1% to 2% of a mutual fund's entire value is a sizable sum. That's why there are things like index funds. After all, you have to get your money back. Index funds have gained popularity among investors. In addition, Warren Buffett is widely regarded as one of the most successful businesspeople in history. Don't take my word for it. Research what successful people like Warren Buffett have said. Similar to how mutual funds make it possible to invest in shares of many different firms, index funds do the same for many different asset classes. If you put your money into an index fund, you're essentially putting it into the entire stock market. So thinking, they are similar to mutual funds, but are passively managed by algorithms rather than professionals. As a result, unlike mutual funds, which aim to outperform the market, ETFs seek market-like performance. The most notable distinction is the absence of professional mutual fund managers. This has the potential to greatly reduce expenses. Individuals who put their money into index funds typically do so with the intention of forgetting about it for a while. The opposite is also true. Index funds need not be mutual funds. I'm having a hard time wrapping my head around it, to be completely honest. Specifically, I attribute this to the growth in value caused by the compounding of interest and principal over time. Investments earn no interest but may still earn dividends and appreciation. This compound interest calculator from investor.gov can help if you're having problems grasping the concept. The monthly cost of maintaining a $1,000 investment in an index fund over a 30-year period comes to $100. Let's use a yearly calculation with an 8% profit goal as an example. Think about the numbers I just showed you. The initial $37,000 investment represents pre-existing funds. In 30 years, you'll have an extra $146,000 thanks to compound interest on your investments. Think about the repercussions of making a larger initial commitment, saving more consistently, or switching to a savings account with somewhat higher yearly rates. With your newfound lexical powers, you can articulate your thoughts on the best methods of financial investment. Like I said before, putting money into an account is an excellent way to invest. Do not linger. Getting started right away is recommended. Roth IRA contributions can be made every year without limit. This ceiling, if my recollection serves me correctly, is somewhere near $6,000. So if you've had a fantastic year financially and are looking to treat yourself, retirement accounts aren't the place to look. The majority of you probably don't have a huge savings account stashed away for a down payment, and we get that. You're not messing up anything. Put a little bit away every month, and eventually you'll have quite a bit. Due to the new facts, you should pay off a lot of debt before preparing for retirement. Here are some of the options you have for investing your money. So, to put it another way, here is what I meant. Numerous strategies have been explored for making money in the stock market. This protection is useful for those who engage in high-risk activities frequently, such as trading stocks. Putting your money into a passive investment vehicle, such as an index fund, is a way to reduce your risk exposure without sacrificing potential return. Although S funds dominate the index fund industry, other options exist. NP. The number 500 is a popular rounding target. The letter S may be used. 500 pesos. I think it's great that you bothered to ask S&P such questions. considering that the 500 exponent was developed to quantify T. Investors in other nations may have a different opinion of the US 500 than those in the US, depending on the performance of the companies included in the index. We are confident that you will be able to identify practical uses for these concepts. This disproves the hypothesis that S&P are equivalent. Brokerage firms often require a starting balance of at least $500 from new clients. We chose to open an account with Vanguard since we know it to be a reliable company. Until recently, Vanguard was the exclusive distributor of index funds. Customers can now choose this service at Charles Schwab and Fidelity. Look into the issue on your own time. The movie's plot is described in detail. You should do some investigating on your own. Every action of yours is totally unrelated to whatever I might have planned. Our goal is to be a helpful tool in your quest for self-improvement. As a result, I have been a Vanguard client for a very long time. Interfaces can make use of actions. It's not the most user-friendly instrument, but it has an extremely low cost ratio and could be an excellent option for investors. Alternatively, investing in an index fund will cost you a meager 0.4% annually. In light of this, I was relieved to come across an article that gave the S&P 500 a bit more weight than it actually has. Buffett staked $1 million on the prediction that a broad market index fund will outperform a collection of individual hedge funds over a 10-year period. Many hedge funds utilize market timing methods to increase returns. The ideal course of action is to buy an index fund and then do nothing with that money so you can track the ups and downs of the stock market. You don't need a deep understanding of money to do this. Investing in one entails doing nothing but watching the S-form. USA's P500 ranks the country's 500 largest publicly traded corporations. As a result, you can invest comfortably in Fortune 500 firms. If you want to spread your risk, though, you can invest in mutual funds that hold shares of several different companies. The foundations of index funds have been laid. This is something I strongly suggest you acquire. The burden of accountability for the outcomes of your choices is totally on your shoulders. Learn as much as you can about it, because you should. It is recommended that you confirm your bank account. A 6-month time frame is too short to anticipate a significant return on an investment. You can purchase a house or retire early without worrying about how to pay for it if you save consistently over a lengthy period of time, 10 years or more. Yesterday was the last day to make significant financial savings. After doing some investigation, I concluded, yes, that's accurate. You need to put that money in immediately and keep putting it in. Allow them to mature properly. Don't put too much faith in your intuition while trying to predict market moves. This is why it's crucial to put some money aside every month and, as we've emphasized, to not touch it. Let's have a serious discussion about the upsides and downsides of investing in the stock market. People will boast about how they became filthy rich by purchasing Apple shares, or another stock, at just the perfect time. Stock purchase agreements can be made. Great chances of success are matched by equally high risks of failure. There is a greater need for expertise and experience in order to carry out the plan successfully. Nonetheless, unanticipated outcomes are also a possibility. Second, it's important to realize that stock values typically go up rather than down. You can expect to make a profit roughly 2/3 of the time and incur a loss the other third of the time. This is in the past, and now is the time to start fresh. Especially now, when a plethora of excellent apps makes it possible to invest even modest sums from a mobile device. In order to help you develop your stock market expertise over time. Many traders have pointed out the advantages of index funds. But if you're willing to put in the time and effort, investing in a certain firm can be a great choice. It's a relief to know that Robin approved of at least this part of the video. The outcomes of all my efforts with them were positive. Don't make any significant life changes based on this video or any other video discussing money. Several members of my inner circle recommended that I read Robinhood to round out my perspective, which I did. Tips for making single stock purchases. The interface's simplicity, ease of use, and flexibility for novice users were big selling features. As a result, you might not be able to buy a particular stock at its current asking price. There are no fees or minimums to invest using your phone. However, the return on investment is just 1452 Tesla compared to Amazon's 3000 Tesla. If you're new to investing or just prefer a simpler interface, this essay is for you. Willing to learn or open to learning? A good book to read is The Legend of Robin Hood. Once again, I appreciate you tuning in, and if you haven't already, I'd highly recommend subscribing. Again, I appreciate your time and consideration. Thank you very much for believing in us and making an investment in our long-term suck. Thanks for watching.